Welcome back. Well, time to head straight to the market now. And yeah, we did get an update there that the banking counter is already reacting with investors selling off some banking stocks with that news on the tax on bank FX profits. And we also see another one, the central bank intervening in the FX market.
In the FX market, this time around.
20K.
Yeah, selling to the BDCs. That's the Bureau de Change operators. And we did think that they had stopped selling to them, but all of a sudden they're back doing that.
They're back.
They must have their reasons. And I'm sure when Caleb Alimi joins us, he's going to be able to give us,
and we saw the weakness yesterday and a couple of days ago. So they're selling to them at 1,450
naira to $1.
So we should expect some strengthening at this point.
We hope
hopefully.
so. We hope so. But this is not all artificial, inflows into the market. Well, interventions are just superficial because they kind of like putting a bandage on a wound and not actually treating the real
But I'll take the bandage at this point.
Oh, really? So let's just kick off with major stocks in Africa, which were, performing in, say, mostly positive territory at intraday, except for Nigeria's NGX, was trading down 0.05%, back to 99,000 level there. But South Africa was in the green at intraday, 0.48%. That's nearly 0.5%. Also, Egypt's EGX 30 rose at intraday. It was up 1.15%, and that's a two-day rally for that index. Very great one, still at the 28,000 level. And Kenya, however, closed Wednesday's session in the red, bucking the positive trend we've seen for that exchange. Now let's touch on activities that have implications on Nigeria's financial markets, especially the FX, fixed income space, equities, all implicated in this. And Caleb Alimi, chief dealer, Providence Bank, joins us. Good afternoon, Caleb. It's always good to have you in the program.
Good afternoon, Will. Thank you for having me.
Caleb, the hot news, just so you know, you heard Laddie and I, if you did hear over here of a conversation, that CBN selling $20,000 to Bureau de Change operators at 1,450 naira to $1, just to meet retail demand. But we're wondering, the CBN had put a stop to this. Why go back to it now?
The simple answer will be demand and supply. There's a lot of demand for FX at this time. We're at the peak of the summer holidays are kicking off. Nigerians will continue to travel around the world and they require, top dollar to spend at their various destinations. So it's only natural that the CBN will come and support the market to continue to sell back to the BDCs. We've seen that in the past, when they were selling to BDCs, we did see, rates actually strengthen or appreciate. And since they stopped, selling to the BDCs, we've seen, rates continue to weaken, especially now that we're going into the season of the holidays, summer holidays. And like I said, Nigerians will continue to travel around the world. I think it is a good development for CBN to begin to sell to the BDCs. I think they're trying to bring the rates down under 1,500. You probably already know that parallel market is doing somewhere around 1,600 levels. And, NAFEM closed yesterday at 1581 thereabouts, So if with the CBN coming into the market to intervene in the banks today between 1510 and 1530 levels, and then announcing that they'll start selling to the BDCs as well at 1,450, expecting them to make just a 1.5% spread and all of that. I think all of that is going to strengthen, the naira and bring rates down.
I'm just wondering, Caleb, for how long? How long will this strengthening last? Because to me, I feel it's artificial and superficial. Because how long would the CBN keep intervening? How much money do we need to sell to the BDCs to actually keep the naira at 1,000, probably below 1,400 naira to $1? What do you see the CBN doing to ensure that the naira remains at a stable rate and not overshoot as we've seen in recent times?
The CBN has continued to explore different avenues to ensure there's supply in the market. Liberalizing the IMTUs to sell to the banks, trying to bring in the IOCs to sell to the banks. But the CBN still happens to be the largest supplier of dollars to the market and sort of like the most consistent and the most reliable in a way. Now, they have to continue to intervene, especially because their core mandate, especially during this administration, is price stability. And they've also seen that if they can keep exchange rates stable, then they can probably keep inflation in check. So I think they'll continue to, adopt all the avenues in their arsenal to just, bring it down. And they will continue to intervene from time to time. It has not been consistent. I don't expect it to be consistent. It's probably be for this season. And just to bring it down under 1,500 and let market forces continue to determine. And then they come back in again if the market is going haywire to sort of bring a bit of calm into it.
Okay, still speaking of FX, now, we're talking about the bill seeking to amend the Finance Act 2023 so that the government can impose a one-time windfall tax on banks' foreign exchange profits that were acquired, they earned in 2023. It has passed the second reading now. And for those who don't know, a windfall tax is a tax that is levied by the government on sectors or businesses that have unfairly benefited from the favorable market conditions. But the president said it will be used to, this part of this revenue will be used to fund the additional 6.2 trillion naira budget that was added, the supplementary budget. What are your thoughts on this, Caleb?
I listened to Taj, who analyzed the situation initially just before me. He mentioned it as a positive development. I think it is quite interesting, because we have to look at different some of the things that the CBN, said about that profits for banks. First of all, it did not allow them use it as part of their capital. It did not allow them distribute it to investors as dividend. And suddenly they're introducing, a 50% windfall tax on that. I think the investors are already showing their sentiments in the market by, what we see is already happening to the banking index on the Nigerian Stock Exchange. I think it's an interesting development. We want to see how they're going to implement it because, the reasons why CBN did not allow banks, capitalize that part of income, a bit controversial. Some say it's paper income, some say it's notional income and all of that. So, and then now the government wants to tax that portion to fund the budget. I think what still remains is that the government is very desperate. They need a lot of funds and they're looking for avenues to fund that deficit budget, so to say.
Well, we'll keep track of that development. Like we say, you just mentioned maybe the federal government was just waiting to lay a tax on it, and that's why they asked the banks not to spend the money on to pay dividends to investors. But speaking of the augmented supplementary budget of 6.2 trillion, which was sent to the Senate yesterday, what impact will this have on the market?
The market expects, it's just signals to us that there's further borrowing. They require more money to run the economy. And so what investors will continue to demand will be higher interest rates. There is another MPC meeting next week where investors or the market generally expects another hike, given that inflation seems not to be slowing down. With that hike and then with an increase in borrowing, there can only be one expectation for investors. We would expect that yields continue to trend upwards.
Now, the market appears to be running on fumes. If you see what was, on the screen there, the OMO auction that, took place yesterday. No sale, Caleb? Talk to us about that.
So, it comes as no surprise that it is no sale. Many of us are used to the times where at any auctions are oversubscribed, but this tells a story in itself. The market has been negative all through last week and up until this week. We opened the week at minus 830 billion, currently at about minus 650 billion, and then the CBN came in to try and mop up about 200 billion and could only attract a paltry subscription of less than 40 billion. That tells a story in itself. They didn't sell because I believe it would not have impacted the market the way they wanted it to impact the market. So that's why we can see that the market is, telling its own story. Things are really, really tight. The CBN has adopted a tight monetary approach, and the market is, showing that.
Seeing what we have for Wednesday is negative, over negative 648 billion, really tight. Could you tell us what is currently applicable right now? What's happening to the market? What's the current liquidity state? And how are investors playing to that? And at what end of the curve of instruments they're even buying? So
investors are not really buying. What we find is banks actually trying to create liquidity for themselves by offloading, whatever short-dated securities they have. So short to medium-term securities are, already trading northwards of 22%, and they may continue to rise, because everybody's just trying to create liquidity for themselves. The market currently is about negative 450 billion. The figure just got released a while ago. So we see that liquidity is improving, however, rather slowly. There's been an inflow of about 65 billion in coupon payments to that has also contributed to, the improved liquidity situation that we're having.
Okay, so what's the outlook? What do you see the market doing today and probably for next week? What's your outlook for the market?
We expect it to remain bearish. We expect to continue to see sell-offs in this in the short end of the curve, for the short to mid-dated treasury bills. And given that there's a bond auction next week where the DMO is hoping to raise about 350 billion, we think interest rates are going to go higher there as well. Last time, the 10-year paper closed at 21.5%. We think it will close around the same levels or slightly higher given the tightness in the market.
Yeah, speaking of that auction, the bond auction that was rescheduled, that was postponed from July the 15th to July the 24th. Hopefully, we hope that we'll see more demand, because the last one, we've seen a decline in bond auction demand at the bond auction recently, and it speaks to the low interest rates permeating in that space. Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing your thoughts on Business Incorporated.
Thank you, Will.
So let's look at the Gulf now and see how major stocks performed at intraday. There were mixed sentiments there. Abu Dhabi was up 0.48%. And we see Dubai also trading up 0.81%. Still within the region, Saudi is down 0.15%. Saudi Arabia stock market eased today, and it's on profit taking. It's on its way to snap that 10-day winning streak. And this was led by U.S. interest rate cuts that, investors are optimistic that the U.S. are going to cut rates. But we'll wait and see. Now, Qatar is also down massive 1.01%, and fully pricing in, investors are really fully pricing in that 25 basis rate cuts in September after, waiting for the Federal Reserve in the U.S. to kickstart that. Now, speaking of the U.S. now, let's look at stock futures there, which were mostly higher in early trade today after the NASDAQ recorded its worst session since 2022. Investors are quitting the big tech high flyers now, so we see that NASDAQ drop really big. Now, Dow Jones Industrial Average was down 0.1% at 41,000 points there. The S&P 500 futures is up 0.04%, and the NASDAQ futures also up 0.19%. Now, on the economic front, we're expecting the jobless claims for the week ending July 13th is due today, and economists are expecting to see claims coming at 229,000, and that's up from 222,000 the week before. As for earnings, we see Domino's Pizza, Alaska Air, and Netflix set to post results today. Now let's look at Asia now. Let's see how the market performed, how they closed Thursday's trading session. Most of the stocks, they fell, Tech stocks are dropping, and so we're seeing a lot of negative sentiments there. In the case, Japan's Nikkei was down 2.36%. That's a massive drop, and leaving that 41,000 level and dropping to 40,000 there. And this is all based on comments from, former U.S. President Donald Trump, raised geopolitical tensions in that space. Now, look at other markets there. The Kospi in South Korea dropped 0.67%. And we also see the Hang Seng Index in China up 0.22%. Also Shanghai, well, we'll see, if you look at the Shanghai market, we see that also up 0.48%. And in Australia, we see that market not doing so well, 0.27%, knowing that unemployment has been, the rate of unemployment rose in that country, and I think that's affecting sentiments in that region. So unemployment, these are things that sway sentiments. Investors are looking, is the economy doing so well? Unemployment rates going up. We're just wondering how much money can people spend?
Everything's about data-driven right now.
Yeah.
The politics of things right now impacting all markets. They've called it the Trump trade.
The Trump trade.
Right there.
Right. Trump is really influencing investors right now.
A lot. Thank you so much, Will, for the update right there. With most of the markets we track, and the global space and the local ones. Let's take it on to